The U.S. markets are currently closed. As of the final bell in the last trading session, Strive Inc., trading under the ticker symbol ASST on the NASDAQ, settled at exactly $1.05 per share. This figure represents a slight stabilization after a period of intense volatility, with the stock effectively flatlining in the after-hours session. While the chart currently shows a price that seems accessible, almost deceptively cheap, do not let the low dollar amount fool you into thinking this is a dormant penny stock. The intraday action prior to the close saw volume surge to over 53 million shares, a staggering level of liquidity for a company of this market cap, signaling that something massive is churning beneath the surface. You likely opened this analysis expecting to hear about a small-cap digital marketing firm, or perhaps a niche asset manager trying to find its footing in a crowded ETF market. That is the expectation. The reality is that the company you thought you knew, Asset Entities, has effectively ceased to exist in its old form. What stands before us now is a radically different beast, a company that has executed one of the most aggressive pivots in modern corporate history. Through a high-profile merger with Strive Enterprises, this entity has transformed into a publicly traded Bitcoin treasury vehicle. This is no longer just about social media servers or marketing Discord communities. This is now a leveraged bet on the future of digital sovereign assets, positioning itself as a direct competitor to the likes of MicroStrategy. The market is pricing it as a speculative tech play, but the balance sheet tells a story of a firm that is hoarding hard assets in a way that could decouple its value from traditional equity metrics entirely. The narrative here is thick with tension because the retail community is largely still catching up to the mechanics of this merger. Most traders see the ticker ASST and remember the old business model: Discord marketing, TikTok content delivery, and influencer campaigns. They look at the earnings reports, which show negative EPS and a cash burn that would typically terrify a value investor, and they dismiss it. But that view is fundamentally flawed because it ignores the new directive. The company has explicitly stated its goal to accumulate Bitcoin, holding over 7,500 BTC according to recent filings. When you do the math on that holding relative to the enterprise value, you realize that at $1.05, you are essentially buying into a holding company where a massive percentage of the market cap is backed by liquid Bitcoin. The disconnect between the legacy perception of Asset Entities and the current reality of Strive Inc., the Bitcoin treasury, is where the opportunity and the extreme risk lives. Let's look at the recent price action more closely. The stock has been battered, dropping from a 52-week high of over $13 down to this $1 level. To the uninitiated, this looks like a death spiral. But when you overlay the timeline of the merger and the capital raising required to acquire that Bitcoin stack, the picture changes. The drop is largely a function of dilution and market repricing of the new structure, not necessarily a failure of the business model itself. In fact, the sheer volume we are seeing, tens of millions of shares changing hands daily, suggests that the shareholder base is rotating. The old retail bag holders who bought the marketing hype are capitulating, selling out in frustration, while a new class of aggressive macro-focused investors is stepping in. These new buyers are not betting on ad revenue. They're betting on the premium to net asset value that companies like this often command when the crypto markets heat up. We need to address the elephant in the room, the anti-woke branding associated with the Strive name. Founded by figures like Vivek Ramaswamy, Strive Asset Management built its reputation on challenging ESG narratives. By merging into a public vehicle, they're bringing that ideological friction to the stock market. This creates a fascinating psychological dynamic. You have a segment of the market that will buy this stock purely as an ideological statement, providing a floor of support that pure math wouldn't justify. Conversely, you have institutional allocators who might avoid it for the same reason. This polarization creates volatility, and volatility is the bloodlife of a trader. When you see a gap down like we did recently, followed by a stabilization at $1, it often signals that the ideological sellers have washed out, leaving the committed, true believers holding the float. Social media sentiment right now is a chaotic mix of confusion and extreme bullishness. On platforms like X and Reddit, the discussion boards are lit up with debates. One camp is furious about the price decline, calling the merger a trap that diluted their equity. These are likely the investors who didn't understand the treasury strategy and were hoping for a quick squeeze on the old business fundamentals. But the other camp is ecstatic. They are posting screenshots of the Bitcoin holdings, comparing the market cap to the value of the BTC on the books, and screaming about an arbitrage opportunity. You see comments analyzing the Bitcoin per share metric, which is the only metric that really matters for a company like this. If the company can increase the amount of Bitcoin per share, either through smart debt issuance or accretive equity raises, the stock price should, in theory, track the performance of the crypto asset with a leverage multiplier. Retail traders are also keenly watching the short interest. Because of the confusing nature of the merger and the legacy financials, this stock is a prime target for short sellers who are betting on the negative operating cash flow and betting on bankruptcy. But shorting a company that holds 7,500 BTC is incredibly dangerous. If Bitcoin rallies 10% overnight, the value of Strive's assets jumps by millions, forcing shorts to cover in a panic. We're seeing signs of this anxiety in the options chain, where implied volatility is sky-high. Traders are paying massive premiums for call options, betting on a sudden, violent upside move. This is not a stock for the faint of heart. It is a battleground where macro thesis meets technical market structure. Now, let's briefly touch on what the company actually does operationally, just to ground us. Strive Inc. is technically an asset management and technology firm. They still have the legacy social media services, designing servers for Discord, managing influencer campaigns, but these are now secondary to the primary mission. The core business is now capital allocation. The management team's job is effectively to manage the treasury, ensuring that they can raise capital at a cost lower than the appreciation rate of their Bitcoin holdings. It's the same playbook that Michael Saylor executed with MicroStrategy. The difference is scale and valuation. Strive is smaller, more nimble, and perhaps more reckless, which offers higher potential upside, but also significantly higher risk of ruin if they mismanage their leverage or if the crypto market enters a prolonged winter. This brings us to the expectation versus reality of the institutional landscape. The expectation is that serious funds stay away from a $1 stock with a history of volatility. The reality is that we're seeing interesting footprints in the data. Firms like Yorkville Advisors have been reported to take positions, and there's chatter about other macro funds using ASST as a high beta proxy for crypto exposure. When a major hedge fund buys a stock like this, they're not doing it for a 5% gain. They're looking for a multi-bagger. They understand that if the SEC continues to approve crypto financial products and the asset class gains legitimacy, companies that hold the asset directly on their balance sheet will trade at a massive premium. The retail crowd is worried about the day-to-day fluctuations, but the smart funds are looking at the 2026 and 2027 horizon, positioning themselves for a potential supply shock in the underlying asset. The frustration among long-term holders is palpable, and I want to acknowledge that. If you bought this stock at $5 or $10, watching it languish at $1.05 is painful. You feel like the market is rigged, like the company abandoned you. But you have to separate emotion from execution. The market doesn't care about your cost basis. The market cares about future cash flows and asset values. Right now, the market is discounting the Bitcoin holdings because it fears dilution. It fears that the company will issue millions more shares to buy more coins, reducing the value of your existing shares. This is a valid fear. However, if the company can execute an at-the-market offering efficiently, selling shares when the price is high to buy assets that appreciate, it creates a virtuous cycle. This is the mechanism you need to watch. If they announce a new capital raise, don't panic. Ask yourself, is this accretive to the Bitcoin per share metric? If the answer is yes, then the dip is a buying opportunity. One aspect that isn't getting enough coverage is the political angle. With the founder's connections to the political sphere and the anti-woke stance, Strive Inc. is positioned to benefit from any regulatory shifts that favor deregulation or crypto-friendly policies. If the political winds shift in Washington to favor digital assets, perhaps through a strategic Bitcoin reserve or favorable tax treatment, Strive is branded perfectly to ride that wave. They are not just a crypto company, they are a, quote, patriotic crypto company in their own marketing language. This branding gives them a sticky user base that might refuse to sell, even when the charts look ugly.
creating a scarcity of shares that can exacerbate upward moves. Comment below how many shares of Strive Inc. you currently hold, or if you are waiting for a specific price target to enter. I want to see if the sentiment in the comments matches the fear we see on the charts. As we look toward the future outlook, we have to consider a few scenarios. The bull case is straightforward. Bitcoin breaks its all-time highs, the quote Strive brand gains mainstream traction as the quote baby MTSR, and the stock reprices to a premium, potentially moving back toward $3 or $5 rapidly. In this scenario, the $1.05 entry point will look like the theft of the century. The bear case is that the company burns through its cash trying to service its operations, is forced to liquidate some Bitcoin at a loss, or faces regulatory crackdowns on its treasury strategy. If that happens, the stock could easily test the 50-cent level or lower. There's also the